Once again, welcoming all the viewers through this educational channel, Accounting Equation Academy. So today I am presenting a class on the chapter cash flow statement, which is very important, especially for the students appearing their board exam. Cash flow statement is a statement which shows cash inflows and outflows between two balance sheet dates. Moreover, according to section 2 subsection 40 of the Companies Act 2013, financial statements in relation to companies include cash flow statement. Cash inflows and outflows classified under three activities, that is operating activities, investing activities and financing activities. So the cash inflow into business and cash outflow from the business are presented with the help of cash flow statement, and which is a prescribed format by classifying operating, investing and financing activities. Between two balance sheet dates, the total cash inflows and total cash outflows are presented. So let us understand the facts of inflows and outflow of cash with the help of an illustration. The problem is on your screen here. From the following information, prepare cash flow statement. So here is the question, and question is provided in the balance sheet format, and the two dates here, first 31st March 2022 and 31st March 2021. So from these directions we have to see that from 21 to 22 the inflow or outflow of cash. The first item here, the shareholders funds. The share capital is given 5 lakh in the year 2021 and 7 lakh in the year 2022. So it means that 2 lakh rupees cash inflows through share capital. Similarly, reserve and surplus in the year 21 it was rupees 2 lakh, and in the year 22 it was rupees 3 lakh 50,000. It implies that the profit made by business, which is increased by 1 lakh 50,000. So 2 lakh plus 1 lakh 50,000, this is the 3 lakh 50,000. These are the, we can also call opening balance and closing balance. So 2021 all balances are opening balance, and 2022 all balances are closing balance, whether these are assets or liabilities. Similarly, non-current liabilities, this is the major head, and under it long-term borrowing, minor head, and then the minor head and the subhead bank loans. The loan amount taken by the business from the bank is in 2021, and it is showing 50,000 in the year 2022. It means that during the year 50,000 bank loans repaid, and balance 50,000 is still there to repay the banker. And current liabilities, trade payables here from 50,000 to 45,000. It is said that 5,000 of trade payables decrease. It means 5,000 amount is paid, and this is a cash outflow. And here the other current liabilities, outstanding rent from 5,000 to 7,000. It means that 2,000 rupees is additional cash taken, and it is in cash inflow. And short-term provision from 80,000 it became 1,20,000. It means that the amount transferred from profit and loss account balance 40,000 during the year. So already 80,000 balance and additional 40,000 transferred, then the total balance became 1,20,000, or the difference is the balance transferred. 1,20,000 minus 80,000, the difference amount is 40,000. In the same manner, here the assets part of the question given non-current assets, and it is a fixed assets given, and a fixed asset again subdivided tangible and intangible assets. Tangible assets 5 lakh, no changes here showing. Intangible assets is a goodwill. Goodwill from 1,95,000, that is during the year 5,000 rupees amortized written off. The balance 95,000 will be written off next over the year. So non-current investment, here it is a balance 0. In the year 2021 there was no balance. In the year 2022 the balance showing 1 lakh. It implies that during the year 2 lakh 20 in 1 lakh, during the year 1 lakh rupees is invested in non-current investments, that is the cash outflow. And similarly inventories from 50,000 1,30,000, it is increased by 80,000, it implies cash outflow. And trade receivable 80,000 to 1,20,000, it implies cash outflow 40,000 rupees. And this is the closing balance of cash and cash equivalent. So at the beginning or opening balance, or in the year 2021 the total cash balance was 2,05,000, and at the end of the year 2022 the total cash balance is 3,27,000. Notes to accounts and explanation of the items of balance sheet which supporting annexure like the items mentioned on the face of the balance sheet. It is supporting documents to the items mentioned on the face of balance sheet. So this information helps to solve problem by giving appropriate treatment of concerned items. Accordingly, here the notes to account given. So on the face of the balance sheet there is mentioned only the share capital. Now companies having these notes to account showing that companies having equity share capital only, and that is the value will be same from 5 lakh to 7 lakh. And now similarly the reserve and surplus heading. This reserve and surplus is only having the balance which is showing, that is the statement of profit and loss, and no general reserve, no security premium. It has only the statement of profit and loss, that is the profit made during the year. This is a 3,50,000. And tangible assets, that it implies that the company is having only the machinery value, that is 5 lakhs and 5 lakh, which is already on the face of the balance sheet it is shown. And this is a short-term provision, so the company is having only provision for taxation. Under the short-term provision, no other items. Similarly, tangible assets, having companies having only machinery, no other assets like plant, building, furniture, motor vehicles, etc. It has only the value of machinery. Now, one more adjustment is there. During the year, a piece of machinery cost price rupees 1 lakh was sold for rupees 80,000. Depreciation charge rupees 50,000 on machinery. So here the costing rupees 1 lakh was sold for rupees 80,000. It means machinery value rupees 1 lakh sold for rupees 80,000. So there is a loss on sale of machinery rupees 20,000, that is 1 lakh minus 80,000. So this 80,000 is cash inflow. Provision depreciation charge 50,000, it is a non-operating expenses. So this 50,000 only reducing the balance of profit and loss. No cash outflow, that is why it is called non-operating expenses. Now based on this question, the solution is here. The proper format, a prescribed format shall be used for solving the cash flow statement. So after the questions, next solution here, cash flow statement for the year ended 31st March 2022. Activities, that is cash flow from operating activities, and net profit after tax. So net profit after tax and extraordinary items. Since extraordinary items are not available in the question, so I have not added that one. So I have tried to make the sentence very simple. So only simply write down net profit after tax. This is 1,50,000. The profit balance, it is already shown in the preceding page. Here also you can see this is the difference, 2 lakh minus 3,50,000. So this the difference is 1,50,000. So the profit balance always we have to write here the difference in the profit balance, 1,50,000. Then provision for taxation, so this is this one. So here I have taken directly 1,20,000 minus 40,000, the difference is 40,000. This is the provision for taxation. And after adding it, 1,90,000, and no other items are here as per the question. So only this one items, provision for taxation, which is to be addable, and net profit before tax. So it is after tax, it is before tax, 1,90,000. Then the next step is non-operating expenses. Next step, so depreciation on machinery, it is given 50,000 rupees, and I already told you that loss on sale of machinery 20,000, and goodwill written off in the question I explained you, it is a 5,000. So these are the non-operating expenses or non-cash items. So these items only reducing the balance of profit and loss account, but no cash outflows. So when the profit and loss accounts was prepared, at that time these amounts are already deducted. Since from the cash flow point of view these items are considered non-cash item, so this item does not involve cash outflow, so we should add back. And next step, non-operating incomes. So in this question, no non-operating incomes item, so it is nil. So after adding all these figures, 1,90,000 plus 50,000 plus 20,000 plus 5,000, so value 2,65,000, and non-operating incomes is nil, so the value will remain 2,65,000. So in this sequence we solve the questions, and next step is giving the effect of current assets and current liabilities, and decrease in current assets and increase in current liabilities. This is the heading. So now those current assets decrease except cash and cash equivalents we present here, and sometimes marketable securities also we do not write. We exclude here cash and cash equivalent and marketable securities. We do not write here. Other current assets, if these decrease in the given question, then we write here. Now the current assets are these two, inventories and trade receivables. Cash and cash equivalent will be taken at the bottom of the solution. Okay, So then inventories 50,000 to 1,30,000, so it is increased, and 80,000 1,20,000, it is also increased. So here we will write only if the asset is decreased from preceding year to current year. So this 2022 is also called current year. So but these two current assets items both are increasing, so we will take in the next step, that is when we will take it in the next step. So then decrease in current assets are not given in the question, but increase in current liabilities is given in the question, that is the other current liabilities, outstanding rent. So 5,000, 7,000 increased by 2,000, so it is inflow of cash. And you remember that all inflow of cash plus and all outflow of cash minus. Then the next step, increase in current assets and decrease in current liability, just opposite to above heading, that is decrease in current assets, here increase in current assets, here increase in current liabilities, here decrease in current liabilities, opposite. Now accordingly, so what current asset, just we have seen that inventories was increased, then trade receivable is also increased. So here inventory increase minus inventory increase means cash outflow. Further inventories purchased 80,000. Trade receivables means increase of trade receivable means cash outflow. Further cash paid 40,000. And trade payables, decreasing the trade payables is the current liabilities. So amount 5,000 paid, outflow. So outflow minus inflow plus. So with this 2,67,000, if you deduct this 80 minus 80,000, 40,000 and 5,000, the value obtained is 1,42,000. And this 1,42,000 having the name cash generated from operation. And thereafter, if it is given in the question that the tax paid during the year, then we deduct here tax paid. So but in this question no tax paid information, and so it is a nil. The balance is the finally during the year, during the two balance sheet date, the total cash inflow through operating activities is only 1,42,000. And thereafter the next heading is your investing activities, and this is cash flow from investing activities. And so first operating activities followed by investing activities. So after putting all the information relating to operating activities, then we find out the final figure, final cash inflow from operating activities, and immediately we start cash flow from investing activities. And the items information relating to investing activities we put under investing activities, and the final figures we also find out whether it is a net cash inflow or net cash outflow during two balance sheet dates. So here sale of machinery, it is given in the adjustment. By selling of machinery, cash inflow 80,000, and this is the machinery. Further additional machinery purchase 1,50,000. This is supported by working note number 1. Later on I will show you working note number 1. How did you get this 1,50,000? And purchase of non-current investment, this is already explained you that during the year 1 lakh amount invested on the securities, 80,000 is the plus figure, and remaining 1,50,000 is the minus, and 1 lakh is also minus. So minus minus plus 1 lakh plus 1,50,000, 2,50,000 minus 70,000, minus 80,000. It is 1,70,000. So during the year net cash outflow under investing activities is 1,70,000. From operating activities total cash coming 1,42,000. Under investing activities total cash going 1,70,000. Similarly, next heading is your financing activities here. So under financing activity, issue of share capital. Share capital is given in the question. It is increased from 5 lakh to 7 lakh. So 2 lakh is increased. Issue of share capital, proceeds received, inflow of cash. And the bank loan 1 lakh and 50,000. So that is the out of 1 lakh 50,000 paid during the year, and the balance 50,000 is still appearing. So that is showing in the column 2022. So that during the year total cash repaid bank loan is 50,000. That is outflow. So one is inflow and other is outflow. So what is the net effect? Net effect is 1,50,000, which is net cash inflow under financing activities amounted to rupees 1,50,000. Now the first column items, first column transaction is over. Now let's see in the second column. So there are three figures always we will get. So like here operating activities, investing activities, and the next one is the financing activities. So 1,42,000 is the plus figure and 1,50,000 is the plus figure, but 1,70,000 is the minus figure. So that means 1,42,000 plus 1,50,000 minus 1,70,000. The net effect, the net balance after giving the effect of this minus figure, so we will get 1,22,000. So if it is represent positive, if it is a positive, then we write net increase in cash and cash equivalent. So against this figure 1,22,000. Okay. The net increase in cash and cash equivalent 1,22,000. The next step is add opening balance of cash and cash equivalent. So that is the opening balance of cash and cash equivalent 2021. This 2,05,000 is the opening balance of cash and cash equivalent. So here we have to write this 2,05,000. So then the preceding balance is 1,22,000 plus 2,05,000. So then figures obtained is 3,27,000. This 3,27,000 is obtained. The preceding figure 1,22,000 plus 2,05,000. So then 3,27,000. In the preceding page, net increase in cash and cash equivalent figure is 1,22,000 plus opening balance of cash and cash equivalent is 2,05,000. So total 3,27,000, and this 3,27,000, which is equal to closing balance of cash and cash equivalent. So this is the closing balance. This is the closing balance. So this figure must be equal to this figure, or this the figure which we obtained here 3,27,000 always equal to this figure. Then we conclude that our cash flow statement is almost correct. Then working notes here. So how did you get that investing activities? Under the investing activities, the purchase of machinery, this is 1,50,000. So when you prepare this working notes, when the working note is being prepared, and then we get the balance. So this is the balance between opening balance 5 lakh, and by bank account by selling of machinery 80,000, and the loss on sale of machinery is 20,000. So this is the cost price of the machinery is 1 lakh given in the questions. Cost price of the machinery is 1 lakh, and the sale proceed is 80,000. So difference is loss, and that loss we always write this side, credit side. And the depreciation is to be provided, it is given in the question 50,000, and this is the closing balance. So the closing balance of 2022, that is the machinery balance which is appearing in the column 2022. So that balance always appear here, and the opening balance, the 2021 balance is opening balance, and 2022 balance is closing balance. So then when we add it, so the total is 6,50,000, which is greater than 5 lakh. So this 1,50,000 is calculated. So then 6,50,000 minus 5 lakh, 1,50,000. It implies that the additional machinery purchased during the year worth rupees 1,50,000. So then this represent cash outflow, and that is why it is deducted, and it is shown in the solutions. Okay, well viewers, so all of you watch it, like, subscribe and share with friends.